All right, guys, so here we are diving into the manufacturing process. So in the prior slides, we talked about, the three types of manufacturing businesses or three types of businesses. And now we're going to, again, dive into just the manufacturing. So consequently enough, or funny enough, I would say is in my prior experience, I worked for Fender as a consultant. So if you don't know what Fender is, they're a guitar company in Corona actually. And so the book talks all about guitars, and I am lucky enough to have experience, or fortunate enough to have experienced the manufacturing process and looking at it from the accounting perspective as well. So I feel like I can lend a lot of my experience to these examples, I guess. All right. So, anyways, when we're looking at the manufacturing process of a guitar, usually it starts off with a customer placing an order. Now, what that looks like is, if I can put it in layman's terms, is like a guitar center or something of that nature is going to Fender and saying, hey, I want 20, or they're specifying a number, quantity, detailed, whatever types of guitar they want, quantity, and they're trying to work out price, right? So no different than trying to buy wholesale or something. But once they have decided on price, quantity, and look and all of that good stuff, from there, Fender now has the information or the order they need to now go and start to manufacture these guitars, right? And so in order for them to manufacture their guitars, they're going to need some materials, right? So they're going to need some wood and guitar strings, the guitar bridge, screws, things of that nature, right? They're also going to need some labor, right? They need people to, to carve it, assemble it, but they also need machinery, right? They need the carving machinery, they need the tools and supplies, they need the sanding equipment. And then once all of that is put into work, then you usually have the final product, which is a guitar, right? Or a Strat, something like that, right? You can take this whole process and do the same, have the same idea. All right. So now let's look at direct and indirect costs. Now, before we dive into the rest of these slides, what I want to say is chapter 1 is all about the foundation. It's all about a lot of terminology. So I really think that it's in your best interest to get down this terminology, because it's going to help you throughout the rest of the book, really. All right, so looking at direct cost is can be identified or traced back to the product, right? So it has to make up a significant enough of the portion of the total cost of the product. So if we're talking about guitars, maybe a good example of a direct cost would be wood, for instance. However, if I'm looking at this guitar, I would say maybe the strings of this guitar wouldn't necessarily be it would be a direct cost, but it's not a significant enough of a cost to be considered a direct cost, because string is maybe a penny at most, and maybe the manufacturing of this guitar is close to $500, right? So it's insignificant when we consider the total cost of the product. Now, if we're looking at indirect costs, it cannot be identified or traced to the product. And so some examples of an indirect cost is maybe the salary of the production supervisor. Now, let's not be mistaken. We need the production supervisor, right? And think of any supervisor. They're usually the ones that are figuring out the issues or the bottlenecks or the problems. They're the one that is, maybe in charge of scheduling people and maybe helping people make sure they take their breaks and things of that nature. So they're absolutely needed. However, they're not considered, they're considered indirect costs because they don't physically touch the product. They're part of the oversight of the product, if that makes sense. All right. So for my visual people, this is a good depiction of of trying to classify direct and indirect costs. So you usually have your cost object, which is the final product, whether that be a Tesla, a Ford, a guitar, or a phone, right? And so now you need to determine if the cost can be identified with or traced to the cost object. which is our guitar maybe. So if it's traceable, meaning it's the neck of the guitar, the body of the guitar, and things of that nature, that would be considered a direct cost. If it's not traceable, such as the supervisor, the janitor, right? Those are all indirect costs, examples of indirect costs. All right, so when we're manufacturing a product, so think of every single product that is being made. What do we need to make a product? So think about that. So maybe you need some labor for sure. You need some materials, as we discussed before. Maybe you need a building to manufacture it. Maybe you need some capital, machinery, things, all of those things, right? So we're going to categorize everything into these three different different costs, if you will. So we have direct materials, we have direct labor, and we have factory overhead. Now we're going to look into each of them, but here it is. Direct materials is exactly what it sounds like. It is the materials that go into making the product. So that could be screws, that could be sandpaper, that could be the wood, right? And then the labor is, the direct labor is the people that's actually, you know, touching the product. So it's the assembly team, it's the carvers, it's all of those people that's in part of the process. Now, factory overhead is what I like to call the catch-all. Factory overhead includes like heating and lighting the factory. It includes the repair and maintenance of the factory equipment. It includes the property taxes of the factory building and the land. It includes the insurance on the factory building and also depreciation. It also includes like indirect materials and indirect labor, okay? So let's go through this example and see if we can figure out, based on this Aston Martin, let's see if we can categorize these 8 items as either direct material, direct labor, or factory overhead. Now, the first one we have is the depreciation of the robotic assembly line equipment. So first off, we should see equipment and depreciation. And so that alone would tell me that is factory overhead, right? So remember, depreciation falls into factory overhead. Number 2, the V8 automobile engine. So hopefully you said that this was a direct material. Without the engine, come on now, let's be real, right? It's costly, it's significant enough of a cost. All right, the cloth materials on the seats, I'm gonna go with a direct material. The wheels, again, that one's direct material. The painting safety mask for employees working in the paint room. Now I'm gonna call that factory overhead. Now that's not to say that the safety mask is not important. It is very much necessary in manufacturing of this vehicle. However, I mean, because HIPAA, right? We need to make sure we protect, OSHA, I should say. OSHA is very interested in making sure people are safe as they manufacture things. But it's not a direct material. It did not go into making the car, right? It was needed, but it didn't go into making it. The salary of the test driver. Now, I'm going to say that one's factory overhead as well. Now, we need the test driver. Let's not be mistaken, right? We need the test driver to make sure it curves and turns and it stops like it's supposed to, but they did not manufacture the product, right? They are just part of the testing of the product. So in that case, it is factory overhead. All right, the glass used in the vehicle's windshield, I'm going to say that's direct material. And then last but not least, we have the wages of the assembly line worker. That is going to be called direct labor. It is direct labor because they're on the assembly line, right? Their pay is tied to how their input of making the product, right? All right, so hopefully that made a little sense. So now we're going to look at prime costs and conversion costs. So your direct materials, direct labor, and factory overhead can be grouped for analysis and reporting needs. And so, So what we're going to do here is put them in these different categories. So prime costs include your direct materials and your direct labor, while conversion costs include your direct labor and factory overhead. Now, what they both have in common is direct labor. Now, in industry, I remember we would focus most of our time right around prime costs. And the reason we did so is because those were things, those were items that we felt at the facility level that we could control, right? Factory overhead such as utilities and depreciation, property taxes, right? That's not necessarily something you can control in a short term, right? So where we will focus most of our energy is around the materials that we use on a daily basis, and then also the amount of labor we employ every single day. So go through this example for a magazine publisher and see if you can correctly classify each of these as either prime costs, conversion costs, or if they would be considered both, okay? All right, so now looking at product costs and period costs. So when we're reporting this financially, costs can be either classified as product costs or period costs. Product costs is all of those associated with the manufacturing process. So in our slide, you see here, product costs or manufacturing costs includes all of your direct material costs, your direct labor costs, and your factory overhead costs. Now, what I really want you guys to do is pay close attention to what goes into direct labor costs or the examples that are under direct labor costs. And those things include, you know, wages of the saw operator and the employees that assembles it, right? And then under factory overhead, they're look at all of these things that are under here, right? So some of these things we've already discussed, such as the salaries of the production supervisor, the wages of the janitor, and things of that nature. But one thing, a few of them we didn't really discuss is like the glue and the sandpaper. Remember, these are all materials which normally we would maybe think it will fall under direct material costs. But remember, when we're talking about direct material costs, it must be directly traced back to the product, and it must make up a significant total part of the total cost of the product, right? So going back to like the guitar strings, for instance, maybe the guitar strings are a penny, right? And the total cost of making that guitar is $500. It is a material, a direct material, however, it's insignificant when in regard to the total cost of the product. Now, looking at our period costs is all of your selling administration expenses, such as your advertising, office salary, so forth and so on, okay? All right, so last but not least, we're gonna talk about product costs and period costs and where they end up on each of the financial statements. If we're looking at product costs, they appear both on a balance sheet as inventory, and also cost of goods sold appears on the income statement. As far as the period cost shows up on the income statement in the period in which the cost was incurred. So your period cost could be seen as like the CEO and the CFO and delivery expenses and things of that nature. So what I want you guys to do now is take a second and go through these and see if you can figure out how to properly categorize each of these for Abercrombie and Fitch as either a product cost or period cost. Hopefully you guys get it. If not, let me know, and then we can walk through maybe where you maybe went wrong, or you're like, that's not sitting well with me, okay?